Hello, I'm Gary.
And I'm Ginger, and we're here today to explain a reverse mortgage in plain English. A reverse mortgage is a loan on your home. You have to have substantial equity in your home to do a reverse mortgage, and you have to be 62 or older. Here's how it actually works. You receive money today. You have no monthly mortgage payments. The loan's not paid back until one of three things happen. Either you sell the house, you move out permanently to live with one of your kids, and thirdly, you pass away. After the last surviving spouse leaves the house permanently, the house is sold and the reverse mortgage is paid off. What's left goes to the kids. As to the amount of money you get, it averages about 60%. The older you are, the more you get. You always keep 100% ownership in the house, and your name stays on the deed. The lender does not take ownership of your home.
To look at it another way, it's just like any other home loan, but with two big exceptions. No monthly payments, no income or credit score qualifying. And here's something else that's interesting. Let's say you're a married couple, and let's say only one of you goes into a nursing home or dies. What happens then? Well, nothing happens. As long as one of the spouses is still living in the home, the loan is not due and payable.
So, what happens when the loan comes due and the house isn't worth what's owed against it?
The heirs would just walk away from the house with no liability to them or their estate. Ginger, you've got to like that.
I do. So now let's talk about who can actually do a reverse mortgage. First of all, you have to be 62 or older, and if you're married and one of the spouses is under 62, you can still do it. The downside is that the loan comes due when the spouse that's 62 permanently leaves the house.
Let's discuss how much money you can get from a reverse mortgage. The older you are, the more you get. The average amount that people get is about 60% of the value of your home. Now, as you can see, the range is 54% to about 70%.
If you already have a loan on your house, you can still do a reverse mortgage, but you have to have enough money out of the reverse mortgage to be able to pay off your existing mortgage. If you don't, you really can't do a reverse mortgage unless you're willing to dip into your savings or some other source and pay down your existing mortgage.
Let's cover your obligations if you do a reverse mortgage. It's three things: pay your property taxes, keep your homeowner's insurance on the property, and maintain your home, don't let it run down. If you don't do these things, the lender can foreclose on your house and you can lose your house.
So Gary, let's recap all of these things. The loan is only for 62-year-olds. It was created by the lobbying efforts of AARP. You can do a reverse mortgage even if you have an existing loan on your house. It'll get paid off by the reverse mortgage, and that eliminates your current monthly mortgage payment. There are no monthly payments on a reverse mortgage, no income or credit score qualifying, and when the last surviving spouse dies or permanently leaves the house, the loan is due. The family has 12 months to sell the house and repay the loan.
And a couple of other things to mention: you can get a fixed rate reverse mortgage or an adjustable rate. You can use the money any way you want to. Total cost to do a reverse mortgage will likely run $9,000 to $13,000 depending on the value of the house. Could be more, but nothing out of pocket. Those costs are added to the loan. And the proceeds from a reverse mortgage are not taxable and don't affect Medicare or Social Security.
We so appreciate you watching. Our company, Reverse Mortgage USA, is committed to helping you and not selling you. Please call us anytime. We can answer your questions or assist you in any way. Enjoy our many other videos, and remember, life is a blessing.